Hi, Bill Bodnar here, Mortgage Market Guide. Thanks for tuning into our MMG Recap. So, have the chart up. First, I want to talk about where we are technically, because you'll notice four red candles in a row. Don't see that very often. And what red candles tell us is that the bond price is we're closing lower from where we opened, and that shows that prices are unable to move higher. Right? That's the psychology of it. Well, let's peel back a couple layers. Well, what has happened this week? Well, we had some major U.S. trade uncertainty, right? And we watched stocks lose over 1,000 points in the last several days. And so seeing bonds unable to move higher in the face of a real bad stock market rout should raise your eyebrows, and it certainly means your clients and your partners have to be on guard in the near term. The other thing that we need to be mindful of in talking with clients and partners are the outsized gains we're seeing in the Treasury market. The Treasury market, even today, we're seeing up 34 basis points in price. Mortgage-backed securities up 4. So you're seeing that when there's an ultra safe haven into the bond market because of uncertainty with this U.S.-China trade, the Treasury market will get a bigger portion of the gains, with the bond market, U.S. Mortgage-backed security market, getting a smaller amount. So real interesting, and something you got to be taking into consideration. But notice the price peaks, back a couple weeks back. This was 102.84, the high on April Fool's Day. Haven't been able to get above it. And so we're in this sideways range, which is great, meaning that rates are still, going in the sideways range, but we could lose ground quickly from here, especially if good news comes out of this trade, trade negotiations. And so what I would be sharing with clients is that if you're getting into that 30-day window where the deal makes sense, especially when you see a technical picture like this, by all means, you should be looking to lock. No reason to float and hope good news comes your way or bad news comes your way, because that's what will help bonds go higher. Hope for some bad news that will propel us another leg higher, because seeing bonds stall here with stocks having a tough time should be eye-opening. At the same time, if you have time with clients, longer term locks, maybe new construction, I would be looking to float those. But again, tight, leash. If we break below some of this support level, you're going to have to be very light on your feet. You're going to want to lock quickly. Looking ahead to next week, you will have some numbers on the economy. Retail sales is a big one, because retail sales is a gauge on the health of the U.S. consumer. U.S. consumer and sales factors about 2/3 of GDP. And so we watched that first print on GDP for that first quarter, the highest in many, many years for a first quarter. So it'll be interesting to see how this number comes in starting the second quarter. So again, need to watch what's going on with that U.S. trade stuff and have your finger on the lock button, because the good news could be bad news for bonds, especially now that we're at these frothy levels, hovering right near resistance at 13-month highs in price. Hope you have a great weekend. Thanks for tuning in. We'll be back at it soon. Bye for now.